Now, because I'm more of a dividend income focused investor, I really haven't had all that much Magnificent 7 exposure in my long-term portfolio, which is sort of a shame because if you look at the performance of the Mag 7 over time, these are 7 individual stocks that have definitely done pretty well over multiple different time frames. Now, not having Mag 7 exposure all changed as of recently because I've been buying MAGI or MAGY, the Magnificent 7 covered call ETF from Roundhill, like crazy over the past several weeks, stacking tons of shares that are offering me insane dividends every single Monday, and maybe most importantly, finally getting some Mag 7 exposure in my long-term portfolio, which is definitely needed. So in this video, we're going to talk about it and go over my, as of right now at least, favorite ultra high yielding ETF, MAGI. I'm going to share with you guys what this ETF is, how it works, why it's my personal favorite, and my plans with this ETF moving forward. So if you're interested in ultra high yielding ETFs that yield much more than 10%, 20, or even 30%, definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now heading right into the MAGI fact sheet, the fun exposure is once again Mag 7, which I do have some Apple exposure in my long-term portfolio. I have tons of Apple shares, but as far as Microsoft, Google, as far as Amazon, Meta, Nvidia, or Tesla, I really don't have that much exposure to any of the other Mag 7 names, which like I mentioned in times past, there really hasn't been any ETFs that offer Mag 7 exposure through a high income strategy that have really caught my attention, but that all changed as of recently with this ETF. Now first, the overview of MAGI. It says the Roundhill Magnificent 7 cover call ETF. MAGI implements a cover call strategy on the Magnificent 7 stocks. The fund offers exposure to the Mag 7 subject to a cap while providing the potential for current income. MAGI is an actively managed ETF. So then says why MAGI. These are some of the reasons, of course, I like this ETF. Weekly distributions. MAGI seeks to generate weekly income through a cover call strategy on the Roundhill Magnificent 7 ETF. MAGI offers precise exposure to the Mag 7 subject to a weekly cap, and actively managed, this ETF implements a cover call strategy, saving investors the time and expense of trading options themselves. Now, the title of the video is true as far as ultra high yielding ETFs, or what I would consider ETFs that yield much more than say 15, 20, 25%, which this ETF, side note, has like a 34% distribution rate. A lot of those ETFs are not really all that trustworthy because of their underlying exposure, in my humble opinion. And when it comes to buying into any ETF, you need to understand what the ETF has exposure to and ask yourself, is this something that you're going to trust long term? Which in this case, I do trust the performance of the Mag 7. I do think Tesla, Nvidia, Meta, Amazon, Alphabet, Microsoft, and Apple are probably going to do very, very well and outperform most other stocks or even ETFs across the entire market for years to come. Now, because it's my belief, I do like having exposure to these specific names through a cover call strategy, which basically caps the upside but also offers a ton of income generation, in this case every single week. Now, I mentioned MAGI does offer, as of right now at least, a 35.66% distribution rate based off of the most recent distribution, which at least as of the last several weeks has been pretty steady. We're talking like 37, 38 cents per share per week as of right now for an ETF that costs, I think, $60 per share. Now, if you're not that familiar with selling options, with selling cover calls, the way this ETF can potentially offer such a high distribution rate is because the Magnificent 7 stocks do each have high implied volatility, which means there's a big potential for drops, but also upside within each of those individual names, which also means there's going to be tons of option premium to be had. So is this distribution rate sustainable? It really depends on what happens with the implied volatility with the Mag 7, but I do seem to think that the distribution rate should stay at least somewhere around this realm. Now, with any ultra high yielding ETF, one of the main things a lot of us investors are definitely concerned about for good reason is, of course, the decay, the price decay, the NAV decay. Has the actual price of the ETF dropped over time? Well, in MAGI's case, it's not dropped, it's not traded sideways, it's actually traded up a little bit, down a little bit from all-time highs, but it's still trading around $56 per share, which is around 6% up in the green. And considering this ETF is, of course, income focused, that's the primary objective, this ETF being up in general is still very, very impressive. Now, total return is definitely definitely the metric that all investors should really focus on, which is dividends plus price return included. And with that, even if this ETF did pay, let's say 30-40% in distributions per year, and even if the ETF's underlying dropped a little bit over time, I still wouldn't really hate this ETF just because, again, if you're paying me that much, I'm still going to consider it a win. Now, speaking of distributions, you guys might also be curious on how these distributions are estimated to be taxed. Well, it looks like there's going to be 100% estimated return of capital. So Maggie, along with lots of other high income ETFs across the market these days, are using ROC as the primary source of the distribution. Now, looking at this ETF's total return, again, this ETF has only been trading since late April of this year, so it hasn't been trading all that long. And trust me, if and when the Mag 7 do see some red, this ETF is not going to be fully protected, guys, so keep that in mind. But the ETF, as far as total return goes, again, not even trading for all that long, is up around almost 20% as far as total return goes. And as a side note, getting paid distributions at the beginning of every single week with this one has been very fun, especially as I stack up more and more shares. Now, it's also fun to go through the math when it comes to these ultra high yielders, especially ones that I personally trust, or at least somewhat trust long term, because Maggie's price is around 57 bucks per share, and the most recent weekly distribution is around 38 cents per share per week. That means that with $10,000 invested, you could buy around 177 shares, which could pay you, based off of these numbers, around $68 per week in income based off of just a $10,000 investment. Now, off the $10,000 investment, we're talking $273 of forward monthly income, or around 3,500 bucks per year, which is pretty crazy considering this is based off of a $10,000 investment. Now, lastly, this is where my head is at when it comes to Maggie. The pros are, of course, the weekly income. I've had a ton of fun getting the weekly income every week, especially as I bought more and more shares of Maggie. There's no decay as of yet. Like I said, we'll see what happens with the Mag 7 in the future. This ETF, along with any other stock or ETF in the market, can of course lose value. The high yield is also a massive pro, 35% yield. It would not take long whatsoever to get paid back your entire initial investment. Now, also a pro is the Mag 7 exposure, which I said I personally do want to have some of in my long-term portfolio. Now, some of the cons are things like the capped upside. If the Mag 7 does see a massive rally, because of the cover call overlay, the capped upside will be in place. It could decay over time. We've seen this happen, especially with ultra high yielders. The distributions could also go down over time, just because we're used to these. With these ultra high yielders, you can never get too comfortable. And lastly, it's not ultra diversified. Even though the Mag 7 are very powerful and strong, I personally still like to have index level diversification across my portfolio, at least generally speaking. All to say that as of right now, I'm going to keep buying more and more Maggie for my long-term portfolio. Again, it's never going to be a massive position across everything for me, just because the Mag 7 is still a little bit too volatile for what I'm looking for. But this ETF has been a great component to my portfolio as I've stacked more and more shares. Now, lastly, before I go to a question for you guys down below, do you currently hold on to any Magnificent 7 exposure ETFs in your portfolio? And what do you think about Maggie? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.